Welcome, my dear students. In this session, I am going to solve the problems on calculation of leverages and also EPS. First, we will see the problem. Here is the problem. The balance sheet of XYZ Company Limited as on 31st March 2020 is given below. Here the balance sheet is given. First, look at the liabilities side. The first one is equity share capital of rupees 10. Amount is 12 lakh is given. 12% debentures 16 lakhs is there. Retained earnings 4 lakhs. Sundry liabilities 8 lakhs. And the total liabilities is 40 lakhs and also total assets is 40 lakhs. Then asset side, it is given fixed assets 30 lakhs and current assets 10 lakhs. Okay, first balance sheet has given. Then the total asset turnover ratio is 3. Total asset turnover ratio is 3 is given. Then the fixed operating cost is rupees 20 lakhs. That is called as fixed cost. And variable cost 40% is given. Here variable cost 40% is given. We have to assume that we have to calculate the variable cost on sales. And tax rate is given 38.5%. Calculate leverages and EPS. Here we need to calculate all the three types of leverages and EPS. EPS means earnings per share. See, with the help of this balance sheet and additional information, we have to calculate leverages and EPS. But the very important thing, it is not given in the problem. What is that? The sales. Sales information is not given. We should calculate the sales first. Now, see the solution. Here. First, we are going to calculate the sales. See, for the purpose of calculating the sales, there is a formula. That is, here see total asset turnover ratio is given. Total asset turnover ratio, how much it is given? 3 is given. With the help of this, we can able to calculate the sales. See here, total asset and turnover. Turnover means sales. Okay. The formula for this turnover, total assets turnover ratio is sales divided by total assets. Okay. Total asset turnover ratio, how much? That is 3. 3 I have written, and sales we don't know. Okay, sales as it is I have written. Then total assets, it is given in the balance sheet, that is 40 lakhs. Okay, now simplify this. Sales cross multiplication, sales is equal to 40 lakhs into 3. 40 lakhs into 3 means 1 crore 20 lakhs will come. Next, statement of profit we are going to prepare now. Here, after calculating the sales, it is easy to prepare the statement of profit. Sales. First, I am going to write sales 1 crore 20 lakhs. Then, variable cost, it is given 40%. 40% means 40% on sales. That is 1 crore 20 lakhs into 40% means 48 lakhs will come. So 1 crore 20 lakhs minus 48 lakhs is the contribution, that is 72 lakhs. Then less fixed cost. See, in the problem it is given fixed operating cost 20 lakhs. That we have to write it here. So contribution minus fixed cost is the EBIT. EBIT is here 52 lakhs will come. Then interest. Okay, interest we are going to calculate on debentures. The debentures amount is 16 lakhs and rate of interest is 12%. 16 lakh into 12% is 1 lakh 92,000. Okay, now we are getting earnings before tax is 50 lakh 8,000 and the tax rate is given 38.5%, that is 50 lakh 8,000 into 38.5%, we will get 19 lakh 28,080. So the tax amount is 19 lakh 28,080. So after deducting tax from the EBT, we will get earnings after tax. How much? 30 lakh 79,920. And I have written here earnings after tax are also net profit available to equity shareholders, because in the problem preference share capital is not given. If the preference share capital is given, we have to deduct the preference dividend from the earnings after tax. At the end, we will get net profit available to equity shareholder. But in this problem, preference share capital is not there. So we can treat earnings after tax are also called as net profit available to equity shareholders. After preparing the statement of profit, now we are going to calculate the leverages. Now, calculation of leverages. First one is financial leverage. The formula is EBIT divided by EBT, and I have simplified financial leverage. Operating leverage, the formula is contribution divided by EBIT. Operating leverage is 1.38 times and financial leverage is 1.03. Then combined leverage, the formula is financial leverage into operating leverage. So combined leverage is equal to financial leverage, we have calculated 1.03 into 1.38 is equal to 1.42 times is the combined leverage. Now, after calculating the leverages, now we need to calculate the EPS. EPS means earnings per share. The formula for earnings per share is net profit available to equity shareholders divided by number of equity shares. Now, number of equity shares information is not given in the problem. So, first we have to calculate the number of equity shares. The formula for that is equity share capital divided by face value of equity share. Equity share capital C in the balance sheet liability side, it is given 12 lakh. 12 lakh divided by face value, that is here given C, equity share capital of rupees 10. Okay. Now number of equity shares is equal to 12 lakh divided by 10, means 1 lakh 20,000 is the number of equity share. Then here net profit available to equity shareholders we have calculated in the statement of profit, that is 30 lakh 79,920 and number of equity shares is 1 lakh 20,000. EPS is 25.66 per share. Next, we are going to solve one more problem. Okay, this is the problem. It is similar to previous problem, but one more adjustment is there. Okay, see the problem. The balance sheet of LMN Company Limited as on 31st March 2020 is as follows. Okay, here also liabilities and assets, that is the balance sheet information is given. Here equity, share capital 60,000 in bracket rupees 10 is there. This is the face value. Then 10% debentures is given 80,000. For the purpose of calculating the interest, we are taking this, that is 80,000 into 10%. Then retained earnings. So this retained earnings and current liabilities we are not going to take for the purpose of calculating the leverages and EPS. Next, fixed assets and current assets also we won't take for the purpose of calculating the leverages and EPS. Now the company's total asset turnover ratio is 3. Here total asset turnover ratio is given. With the help of this, we are going to calculate the sales. That is, the formula for total asset turnover ratio is sales divided by total assets. Here total assets is given 2 lakhs. Then its fixed operating cost is rupees 1 lakh. That is fixed cost. And its variable cost is 40% and tax is 50%. Next, calculate for the company all the types of leverages. That is 3 types of leverages we have to calculate. That is financial leverage, operating leverage and combined leverage. Next, determine the likely level of EBIT if EPS is rupees 5. See, in the previous problem what we have done, first we have calculated the sales, then statement of profit and calculated the leverages and EPS we have calculated. Here we have to follow the same procedure for the A, but for the second one we have to go in the reverse order. I will tell how to do that. Okay, first calculation of sales. The formula is total asset turnover ratio is equal to sales divided by total assets. That total asset turnover ratio is given in the problem, that is 3 that I have written, and the sales is not given and the total assets is 2 lakhs. Now sales is equal to cross multiply 2 lakhs into 3 means sales 6 lakhs. Now we have to prepare the statement of profit. That is sales 6 lakhs minus variable cost 40% is given here. See, 6 lakhs into 40%, 2 lakh 40,000 and the contribution is 3 lakh 60,000. And fixed cost, that is fixed operating cost is given 1 lakh. Contribution minus fixed cost EBIT, that is 3 lakh 60,000 minus 1 lakh is 2 lakh 60,000. Then minus interest. For this we have to see the debentures. Debentures amount is 80,000 and the rate of interest is 10%. 80,000 into 10% means 8,000. Okay. EBIT minus interest is earnings before tax is 2,52,000. Then tax we have to deduct, that is tax rate is 50%. 2,52,000 into 50% is 1,26,000. So in this problem also preference share capital is not given. So we can treat this earnings after tax is also net profit available to equity shareholders. Next, calculation of leverages. With the help of this statement of profit and formula, we can calculate the leverages. That is financial leverage, EBIT divided by EBT. Substitute the amounts, we will get 1.03 times, and operating leverage contribution divided by EBIT. Contribution is 3,60,000 and EBIT is 2,60,000. 1.38 is the operating leverage. Next, combined leverage. Here the formula is financial leverage into operating leverage. That is, we have calculated financial leverage and operating leverage. 1.03 into 1.38 means 1.42 times will come. Next, we have to calculate the EPS. Okay, the formula for EPS is net profit available to equity shareholders divided by number of equity shares. Here also number of equity shares is not given in the problem. First we have to calculate. The formula is equity share capital divided by face value of equity share. Here number of equity shares is equal to equity share capital is C. 60,000 is given and the face value 10. 60,000 divided by 10 means 6,000 is the equity shares, number of equity shares. Now EPS we are going to calculate. Net profit available to equity shareholders already we have calculated in the statement of profit, that is 1,26,000, and number of equity shares is here 6,000. Now EPS is 21 per share. So this belongs to first one. A we have completed. Although here they have not asked us to calculate the EPS, we have calculated because the next one we have to calculate relating to the EPS. So I have calculated the EPS here. Now the second thing what we have to calculate. See the problem. Second one, that is B. Determine the likely level of EBIT if EPS is rupees 5. So we have to calculate EBIT, earnings before interest and tax, if EPS, that is earning per share, is rupees 5. Okay, that we are going to calculate it now. See solution. Determination of the likely level of EBIT if EPS is rupees 5. Now we are going to calculate the EBIT. First, yeah, because we have to calculate the EBIT, I am going to write this format in the reverse order. Okay, which is the last one in the statement of profit, net profit available to equity shareholders. Here, net profit available to equity shareholders, how to calculate? Means number of equity shares into EPS. Number of equity shares into, I am writing here, number of equity shares into EPS. Okay. Now, number of equity shares already we have calculated. That is 60,000 divided by 10. That is 6,000. And already in the problem it is given. We have to calculate the EBIT when EPS is 5. Okay. 6,000 into 5, 30,000. Next, add preference dividend nil, because in the problem preference share capital has not given. Next, if we add preference dividend means earnings after tax, that is 30,000 plus 0 means 30,000 only will come. Next, this is earnings after tax. Again add tax. Tax, how to calculate this 30,000 means, see, tax rate is 50% is given. Here earnings, this earnings before tax will be 100%. In this 100%, that is earnings before tax will be 100%. Okay, and this tax will be 50%, and earnings after tax will be 50%. Okay. Now see, earnings before tax is 100%. In the tax is 50% and remaining is 50%. So for 50% here, the calculation of tax amount for 50%, 30,000 means for again 50% how much? Cross multiplication 30,000 into 50 divided by 50. The tax amount will be 30,000. That I have written here. Then we have to add 60,000 is the earnings before tax. Then interest. Interest, how to calculate? The same procedure, that is the debenture amount is 80,000 into 10% is 8,000. Okay. Earnings before tax plus interest is the earnings before interest and tax. They have asked us to calculate EBIT when EPS is rupees 5. When EPS is rupees 5, the EBIT is 68,000. Okay. See, actual format from the EBIT I am telling, EBIT minus interest. Actual format I am telling, EBIT minus interest. EBT will come. Again tax we have to deduct, EIT will come. Then again preference dividend we have to deduct. We will get net profit available to equity shareholders. Because we need to calculate the EBIT, I have written the format in the reverse order. When we are writing in the reverse order, instead of deducting, we have to add it. Okay. And this tax amount you have to keep in mind, this earnings before tax will be 100%. Okay. Or for example, here the tax rate is 30% is given, means earnings after tax will be 70%. Okay. One more example I am giving. Tax, if the tax rate is 20% means earnings after tax will be 80%. Okay. Thank you.